two results that came out, Bharti Airtel and Kotak Mahindra Bank. Kotak was good, so let's just go across and listen into what the management has to say.
Our quarterly and annual results of Kotak Mahindra Bank, and I'll request my colleague Jaimin Bhatt, the CFO of the bank, to take us through the numbers, and thereafter I will be happy to do Q&A with all of you.
Thanks. Let me take the consolidated numbers first. We end the year March 2011 with a profit of 1,567 crores, which is a 20% rise over the last year's number of 1,307. This quarter, which is Jan-March, we closed with a profit of 491 crores, which is a 28% rise over the immediately preceding quarter, where we had clocked 384 crores. At the group level, we have a very healthy capital adequacy. We are at 19.5% overall, with Tier 1 itself just short of 18%. Our net NIMs at the consolidated level continue to be at 5.6%. At consolidated level, our advances are at 41,000 crores, which is a rise of about 39% over the last year period. Bank standalone, we had the year closed at a profit of 818 crores, which is a 46% rise over 561 crores, which we did last year. And for this quarter, we did 248 crores, which is also a 32% rise over the immediately preceding quarter. At the bank, we have advances of about just short of 30,000 crores, which is roughly a 40% rise over the previous period. And this year we've seen the NPAs coming down pretty significantly. The net NPA, other than what we call acquired stressed assets, dropped from 1.23% at the beginning of the year to just 0.5% at the close of the year. At the bank itself, our capital adequacy is just short of 20 overall and short of 18 at Tier 1 levels. We have 321 branches as we close the year. At bank level, our ROA is at 1.8% for the year. The NBFC in the group, which is Kotak Mahindra Prime, almost doubled its profits, closed the year at 318 crores as against 166 crores for the previous year. Thanks to turbulence in the markets, our securities company and our asset management companies had some drop in the profits for this year compared to the previous year. On the other hand, the life insurance entity ended with a profit of 101 crores for this year compared to 70 last year. So that's broadly been our financial numbers for this year, and should be happy to take questions.
Take us through the provisions, that will be fine. We've seen a decline, but you said this is after netting off the recoveries which have been made. This is could be part of the written off account. So if you could tell us, give a breakup of how much the recoveries was, if there was a technical write-off.
Technical write-offs is very little, but what the provision number which you see there would be net of the provisions which I may have provided this year, which I have recovered, as well as if I had written off or provided in the previous year, which I have recovered. So those will be adjusted for it, but net what you're seeing is the rise to the NPA is lesser, or rather what I'm recovering from the NPAs is more than what I'm creating new NPAs. And therefore, if you look at the current quarter, our net number is actually negative.
How much is the total recovery?
Total recovery would be, for this quarter itself, would be about 100 crores not.
And the whole year?
Take us through your margins for the quarter for the bank, and what are your targets going forward?
Yeah, outlook bhi bata de do. Hindi mein bhi bata dijiye.
This quarter, as I said, we did a margin of 5.6%, which is a marginal rise over 5.4. The bank is at 5.5, so the consolidated at 5.6. There's not a significant difference between the two. For this quarter, we had a small rise in the NIMs, thanks to a couple of factors. One was the fact that what you saw this quarter, the rise in the advances was more in the commercial vehicles and construction equipment and those lines, whereas the corporate book, as in the mortgage book, did not grow as much. So that gave us a better spread. The other one was, of course, what we started passing on to the customers. We were able to absorb more in this quarter than the previous quarter. You also saw the government securities yield better numbers in terms of yields in this quarter than the previous quarter. So all in all, we had a marginal rise in the NIMs during this period.
So what is going target going forward?
As we see pressure, I mean, you will see the mix changing. You're growing the corporate book more. Mortgages are growing more, so you may see some pressure, but our belief is on a comparative basis, north of 5 is certainly there.
What impact are you seeing with the policy measures? I mean, how is it going to...
Okay, I'll come to that, and let me just add to what Jaimin has said. First of all, I believe that if you look at our consolidated financial numbers for the year, it reflects the strength of the diversity of our business model. We've seen a very strong growth in the bank. We've seen the strong growth in our NBFC businesses. Our investment bank has seen a rebound in the last quarter. Securities business, as all of you know, since most of you are pretty close to the market, is going through fragmentation and margin pressure, so that is reflected in our numbers as well. Our life insurance business has weathered the storm of the transformation post the policy guidelines. And what I actually want to say is that one of the strengths of our business model in the financial sector is the fact that from time to time the different segments of financial services have good times and at times there are pressures. I just look back at our business 3 years ago. The standard question which most of you would ask me at such meetings is, oh, your profits from capital markets are very significant. So thanks to the markets, some of those have got corrected. At the same time, we have still grown the overall profits despite those pressures. And we believe that this diversity and integration of our business model is one of the big strengths of Kotak as a story, fundamentally in the financial services sector in India. And we are very committed to building a unified financial institution with a well-balanced portfolio between banking, non-bank financial services and other aspects of financial services. We are believers that yes, capital markets have their rough times, which they've had certainly for the last few years from the point of view of the securities business, but in that we see a longer term opportunity. So our commitment to grow those businesses continues completely, and if at all, it strengthens our purpose to increase our servicing of those businesses, because we do believe that finally the customer is going to need a menu of services. We need to ask ourselves the fundamental question: what we as people, that is both the policymakers, the media, the practitioners, all of us are doing to ensure that the longer term equity culture in India, which is the saver also becoming an investor, is preserved and grown. And if at all, I think at this point of time, the saver is saying that I'm getting a lot more return in things like bank deposits and fixed income instruments, which is where the core of a banking business comes in. But over time, as savers will want to diversify, he's moved away pretty significantly from the equity market, at least the Indian saver. And this time will hopefully at some point of time change. And how well are we prepared? And what are we doing proactively is an important aspect of how we look at the future of financial services. Therefore, from our point of view, on a micro basis, we are a well-balanced model. Therefore, if the saver and the borrower model gets more dominant, which is the bank and non-bank finance, we are present in those spaces. If tomorrow the model moves more towards the investor side and issuer side, which is to the capital markets, we are well present there. But we believe that this model at this stage is getting more skewed in favor of the saver borrower model, and the investor issuer model has to get more focus from all of us.